Welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. In this episode, I'm speaking with Terrence Martell, Chairman of VVC Resources, a natural resource exploration, development, and managing company based in Ontario. Hi, Terrence.
Good afternoon, and thanks for the opportunity.
Yes, good to be with you here. Let's start our conversation with some significant developments at your company recently that have shaped the trajectory of VVC. Could you tell us about that?
Sure. After quite a slog, we have kind of come to a point where we've seen some significant progress in the last month and a half, 2 months. We had a related company, Proton Green, go public, and we can talk more about that later as you need. And VVC was also able to sell 2% of its ownership of Proton Green and take in $5 million of additional capital that allows us, frankly, to recapitalize the firm and proceed with our longstanding plans to complete 10 additional wells, gas wells.
For those listeners or viewers that are not familiar with Proton Green, can you talk about what that company is and the value proposition and the role it plays for VVC's strategic vision?
Well, Proton Green and VVC kind of started off as a team. Proton Green people came with some ideas about drilling for gas in Kansas. We developed I don't say a partnership, just a working relationship. And it got to the point where we were in the process of developing some wells, and they had an opportunity to develop another property that was much larger and involved about 120,000 acres in Arizona. These acres contained CO2 and helium, no hydrocarbons. And we reached an agreement whereby we, VVC, would take 19% of that project and continue to work together, although clearly as two separate entities with two separate goals. Confluence of interest, but not identical interests. The 19% cost us $19,000, which sat on our balance sheet at that amount. Proton Green continues to develop and started producing helium, I guess, earlier this month, and went through a reverse merger with a valuation of $250 million. Well, that dramatically changed the valuation of the VVC shares of Proton Green that sat on the balance sheet. So we're now looking at an asset that's now worth $25 to $30 million, changes the balance sheet, changes the perspective, creates additional opportunities. Meanwhile, back at the ranch, as it were, we needed to refinance, continue our own drilling operations. We had drilled 8 wells. We had built a pipeline, a gathering system connected to a pipeline, but we had insufficient funds to complete the project. Someone wished to invest in Proton Green. We sold them 2% of our holdings for $5 million, and that gave us the capital to start to execute the plans that we have for our initial well drilling. 2 big events, separate but related. We're quite optimistic that Proton Green, which will go public, is public, but will start trading in a month or 2. That's their business, not my business. But, we're now going to have a market price for that stock. That market price is going to be reflected on our asset base. Balance sheet's completely changed. Issues about going concern are gone. We can develop the wells we want to develop. And from the cash flows of those wells, according to our plans, we're in excellent shape. The reality is we really have no immediate need for additional debt or equity financing now that we are in this much more advantageous position. We're a liquid junior mining company. You can count on one hand, the number of junior mining companies that can make that claim. So lots of opportunity, lots of hard work. It's amazing to me how these unrelated events come together to create opportunities that you didn't really see.
So that's, good news for shareholders, I think, with, your project being funded for your helium production. So can we talk about a little bit more about, your helium production and strategy for profitability moving forward?
Excellent. We've done an incredible amount of work looking at prior filed plans. Turns out that virtually everything that you do in Kansas in a well ends up in a file in a county office in Kansas. So you go and you look at old reports, at old maps, etc. And the professionals on our staff were able to ascertain where best wells were. So we've identified, as I said, already 8 wells that we drilled. We need to finish those wells, and the money we have in the bank now will allow us to do that. We also wish to, these wells are all in Hamilton County, Kansas. We have leases a little bit north and a little bit west, still in Kansas, that we feel also have excellent potential. They were well drilled years ago. Gas price was too low, no pipeline, whatever reason. Times change, those wells are still there. We've leased them, and we have an opportunity now to go in and drill wells in the same area and hopefully get the same results. I mean, we all are aware that all the good tests and all the good data and all the good thought that goes into something, at the end of the day, unless you put that well in the ground and out comes gas, there's a risk. But we think we've mitigated that risk by spending a lot of time, fair amount of money on analytics that will increase the probability of going down 2,500 feet findings. It isn't a walk in the park, but if it works out, it will be quite profitable. So the short-term plan is we get the 8 wells that we know have gas in them. We don't know how much gas. We don't know the quality of the gas. But in drilling, we detected helium. Okay, find out how much there, price, quantity. We'll have cash flow going forward that will support our other opportunities while still living with a $30 million asset over here. Should organic growth become available to us.
Are you looking at other properties to explore or to expand your current project? And the reason I ask is the global market for helium is expected to reach about $3.4 billion by 2030, according to Research and Markets. What are your thoughts on how the resource sector and governments can help close the gap between supply and demand for helium?
Well, we're fortunate to be in one of the areas in the country where there's a lot of helium. Helium, as you know, comes associated with natural gas. You find the natural gas produces, you find a better chance of finding helium. The Proton Green field is somewhat of an anomaly. It's with CO2. But we have been leasing opportunistically, and now that we have a little bit more cash, we will be a little bit more aggressive on the leasing. We've got about 100 well sites to build out, potential. You figure it's $750,000 a well. We've got a ways to go, get through that much drilling. And of course, you only continue to drill if you're achieving success with your plan, because success with your plan is generating the cash flow that feeds into the dividends that you're going to pay your stockholders and the returns that they legitimately expect. I mean, we've had investors involved in this company for a long time, very patient, but it's time for the rubber to hit the road. We want to give them a return, and we think we've got a clear path to that. Now, what I think and what God thinks are not necessarily the same thing. So, time will tell, but it's, it remains an investment I am pleased to be chairman of and happy to support with my own personal money. And it's been basically a friends and family raise pretty much from the get-go.
So is the work plan has the work plan commenced in the projects right now, or what's the timeline for that?
We're trying to be very disciplined and very focused. So we are in the process of leasing what we call workover rigs, which are smaller than the big rigs to drill a whole new well. We use them on the 8 wells that we've got to complete. We're going to test 2 other wells in the other part of Kansas, and so for those you need bigger wells. Fortunately, bigger drills. Fortunately, with the pressures on energy companies these days, you're finding fewer and fewer people willing to do this kind of work, so that the amount of that is to drill for wells. So the people who have drilled, they're not easy to get, but they're available. So we've already started that process. You mentioned about what do we do going forward. I've been involved in the commodity business longer than I care to think about, and I know commodity prices are mean reverting. So there's going to be reaction to the high commodity prices in helium. I don't think it's going to be a near-term reaction, because what people forget is for up until 2021, the U.S. government sold helium out of a strategic reserve that we put together probably in the 30s, because we thought dirigibles were going to be the thing of the future. We wanted to make sure we had a supply of helium. So we created this huge supply, and the U.S. government's been selling out of that supply for decades. And that supply is pretty much down to, my understanding is they only sell it for scientific research. So the market had to go find another place for helium, and they weren't prepared. They weren't ready to do that, which explains why there were so many abandoned wells in the Kansas area, because there was no real price that was worth, they weren't economic. Now they're economic. The government wanted to do something to help this situation. They might want to make helium a strategic reserve commodity, that we rebuilt some of that reserve. That would encourage perhaps the permitting process to get a little bit easier, right? And skip more drilling. It's a problem. I don't see a near-term solution. You hear about the Russian plan, but with sanctions and the other problems, just don't see it. So, 2 or 3 years, I think we're going to be in this same situation. After that, as you know, markets adjust.
That would be interesting to see in the future. Well, thanks again, and all the best to your, next work plan, and looking forward to hearing more about that in the near future.
Thanks for having us and having me, and happy to do this anytime you like to talk to somebody.
And thanks everyone for watching. Join us again next time for another engaging conversation on CEO Insight. If you like this video, subscribe to our YouTube channel and turn on notifications so you don't miss the latest updates and interviews from Investing News Network. See you next time.